Welcome to Master Trader, where you learn simple market analysis to make money investing and trading in the markets. I'm Dan Gibby, and in this week's Chart of the Week, we're going to discuss a compelling breakdown that's an open position of ours in the ETF investment letter. And I'm just going to walk you through a number of very objective principles that we teach in our Master Trader Strategies course, which is going to show you that this was an incredibly high odds short setup on this ETF. Last week we issued a short recommendation right under the low of this bar, so we've been in it now for 4 days. And into this climactic sell-off here, look to the left, an area of support right at 74 bucks. We booked almost $6 a share in 3 days. Simple candlestick analysis, a few moving averages. We have the 20, the 50, and the 200. There's no magical oscillators, proprietary information. The Master Trader approach is all about finding high probability setups with a compelling pattern on multiple time frames, use bar by bar analysis, time it, entry with the sector and the broader markets, and it's really that simple, folks. So let's drill down and look at some of the concepts one by one that we teach in the Master Trader Technical Strategies course. So what is the overall pattern of this? Well, let's look at it. It was in an uptrend here. It broke its uptrend and now is in a sideways trend, and it's getting tight right here at the declining 20, and it broke down. So the overall pattern is a breakdown, but let's analyze it a little bit more in detail because it made it more potent of a breakdown setup. This is a concept we teach called breakout failures and breakdown failures, of course, but we're focusing on a short here today. And put your mind in the seat of these traders. It was an uptrend here. This was a bullish gap, retraced. This was another new high, and it failed. That's what we call a breakout failure. It tried again, back to resistance here, failed again. So these are signs of sellers, and failed breakouts is bearish. What about support and resistance? We look at support and resistance as its areas where buyers step up. We look at pivots, we look at congestion, we see where buyers are, we see where sellers are, and when we're trading, we're just trading with either the bull or the bear who has control of the stock in that time frame, waiting for our setup, and we just simply enter and manage in between. So this here, when it failed to make a new high, this is now major resistance. This prior low was support. It took out this prior low though, so we actually have a lower low. Now I have a lower high, so we're in a wide sideways trend right now, but then I have another lower low, I have another lower high, so these are different levels of resistance. What about moving average convergence? Moving averages are very simply a squiggly line. It helps us speed up the analysis, but they're meaningless unless they correspond with actual support and resistance areas. Notice how all three of these, they're telling a story. So the last 20 days of data flattened out and is starting to curl down. Same with the 50 period of closing prices divided by 50. The green bar is now flat. Same with the 200. When you have converging areas of moving averages like this, that suggests a pick up in volatility, and obviously the candlestick pattern suggests which way it's going to move. That helped confirm the bearishness of this pattern to us. Volume analysis. We will trade candlestick patterns without volume, but we use it as a plus, particularly on igniting moves and ending moves. So in this case, when we entered on this day, notice the big pickup in volume. Even though it was a narrow range day, the selling, the size of the bar here didn't pick up until afterwards, but this was the worst performing ETF of the entire week. And Greg, my partner, even said in the video when we gave this to our subscribers last week, he said, this sector is in trouble. And we were just so confident that it was going down. So again, the pickup in volume at inflection points, that is a positive. bar by bar analysis. Once we're in a trade, we just simply look at bars, and that helps us manage what is going on in reality. We have a saying, it is what it is. We're in the breakout, range is expanding. Range is expanding. I mentioned on the other slide, we're in an area of support, so we covered a third at $74. This last bar, it's a bottoming tail, relatively equal close. It's still in the bottom 20% of this ugly red bar. It still looks lower. That's why we only covered a third of our merchandise. Whatever, we'll see now how deep that it can go. And then that will help dictate to us the strength of it. But also another concept that we talk about here is green bar ignores, topping tails, or the further false breakouts that we mentioned. But look at this. It couldn't get 2 green bars in a row ever since this breakout failure here. And then volatility is getting very tight. It can't bounce. And then the bottom falls out. We like looking at patterns, and we teach how you go up one time frame and down one time frame. And both, even though I'm not showing it here, both the weekly and the monthly chart were also bearish, which is why we put this in our ETF investment trader, which is a holding period of weeks to months. So again, this course here that Greg put together, go to mastertrader.com/swing trading. Just absolutely phenomenal course, how he gives you all of these thought building lessons, just like I'm showing you in here, and it applies to anything that moves on any time frame, and it will teach you how to objectively determine what is going on in the underlying issue without having to listen to misleading oscillators, misleading market analysts, it's misleading fundamental analysis. Technical charts is a true reflection of what is happening with all market participants at any point in time. This is actually the ETF investment trader that I mentioned. It focuses solely on trading ETFs for longer term gains, a holding period of weeks to months, and it's a fantastic longer term investment strategy. ETFs, they have less gap risk, of course, and it allows us to pick the best of the best as opposed to just holding on to the S&P, the SPDR, for example, which is 500 stocks. The SPDRs were up last week. Diamonds are close to an all-time high. Q's made a new high, and we managed to pick the sector that was down over 7% for the week. So check both these out. They will really dramatically increase your ability to profitably trade and invest in the stock market. Good trading, everyone, and see you next time.